So Cathie Wood last week spent over $47 million buying Tesla stock, and just yesterday she bought an additional 115,000 shares between her two funds, which if you pull out your calculator and do the math, it comes out to around nearly $15 million. So it's safe to say that Cathie Wood has been on a little bit of a shopping spree. Now when I see patterns or behaviors like this, the first thing I do now is I just log into Twitter, and the first thing I try to look into is what is Cathie Wood saying, and I wanted to pull out something that I thought was pretty interesting that she mentioned. Cathie Wood just tweeted that now that supply chain bottlenecks are diminishing, Tesla can cut prices in line with battery cost declines, driving demand while limiting the impact on profitability, right? According to Wright's Law, battery cost drops 28% for every cumulative doubling in unit production. According to S-Course ARC's research, which I'm not sure if I'm pronouncing that right, having leverage off the consumer electronics industry, which most other auto manufacturers did not do, Tesla's batteries are 3 years ahead of the competition in terms of cost for a given range and performance. So this is something that I mentioned in my most recent video in regards to Tesla stock, where I talked about, the special power that Tesla has with pricing power. See, what ends up happening during a recession, especially right now, when the Federal Reserve is hiking interest rates in order to combat inflation and stifle demand, well, what we end up seeing is that consumers aren't spending as much. So demand obviously diminishes. And this is a narrative that has been, spun on Tesla. Are they going to be able to keep up with demand or keep demand during a recession? And here's what they've been doing. So we've heard that Tesla has been, cutting the prices of their EVs. And, a lot of people have seen this as a very bearish move. However, this could possibly be something very special as, during a recession, a lot of companies are competing for demand. And so if Tesla could kind of just bring the demand over to their cars based on the pricing, well, guess what? That helps them sustain themselves during a recession. And this is obviously the reason why Cathie Wood has just been pouring millions and millions of dollars into Tesla stock. Now, I've been a little hesitant into participating in this rally that Tesla stock has been having, mainly because I'm not entirely sure how long this rally is going to sustain itself. And if you look into ticker symbol SPY, which is the S&P 500 index ETF, you see that we're actually still declining on a long-term trend, and we actually just got rejected on this descending trend line. On top of that, we're currently in earnings seasons where we're going to see a lot of companies report their earnings for Q4 of 2022, and I'm not sure exactly how that's going to play out. But my biggest fear is Elon Musk selling more shares of Tesla, as we just got news that Twitter revenue is down 40% year over year. Now, why is this a concern exactly? Well, the possibility is still there that Elon Musk may liquidate some more shares of Tesla just to cover for the losses in Twitter. Now, I know that in the previous video, probably last month, we talked about how Elon Musk in his Twitter space said that he is not going to sell any more shares of Tesla stock. However, it wouldn't be the first time that Elon Musk said he wasn't going to sell any shares and then ended up doing the exact opposite. In fact, in 2022, he actually did that about 2 different times. So it's not a surprise that I may be a little concerned about that, especially as on Wednesday, the Financial Times cited people close to the buyout as saying the required low payment for Musk could come as soon as the end of the month, right? Bankers are already negotiating with him over the replacement of $3 billion of expenses unsecured debt carrying an interest rate of 11.75% with margin loans that are backed by Musk's stake in Tesla. Now, I'm not trying to scare you guys or put any foot out there that Elon Musk may sell Tesla. I'm just trying to be a little bit more protective for my own sake, and I'm not participating in every rally, as in a bear market there's a lot of relief rallies, and based on a lot of the literature that I've read, sometimes it's good not to participate in every single relief rally in a bear market, and sometimes you're better off just kind of staying on the sidelines and waiting things out. And just to reinforce what I'm saying, Cathie Wood is, yes, buying millions of dollars, but Elon Musk can potentially sell billions of dollars, or even just 1 billion, and we know that just by doing math, 1 billion is greater than hundreds of millions. Now, at the end of the day, we have to understand what is actually happening. What I'm saying is just a potential risk, right? Because what's currently happening is buying of millions of dollars. So selling of 1 billion or billions has not happened. So this is just me being overly conservative, but there's more risk to Tesla that I haven't mentioned. So if you made it this far in this video, then thank you. Might as well hit that like button. Also subscribe if you haven't done so already. But another risk is Elon Musk is currently in trial just for, stock market manipulation through things that he tweeted in 2018 about taking Tesla private. And so the outcome of that trial could honestly have a negative influence on Tesla stock as well, which is another reason why I'm really just kind of standing still on the sideline. Now, for those of you guys that are subscribed to the channel, then you guys know that I often cover updates on monetary policies and what's going on in the macroeconomic climate. And some of you guys might be wondering, well, Justin, how come the PPI report came out positive today, showing that inflation is still showing signs of, decreasing, yet we had a red day in the overall market, right? So here's the thing, guys. We had commentary from people from the Federal Reserve already stating that, yes, they do see inflation trending downwards, which is good, but they don't want to take their foot off the gas, right? They want to continue because obviously the Federal Reserve, they want to avoid, something that happened last time, or actually if we just go more recent to just like 2020 and 2021, where they were very late on raising rates, right? And so what they have to do is continue pushing the gas. And so they already made statements that they're going to continue hiking rates, which of course is very negative and bearish for the overall market. But, at the end of the day, we'll see what ends up happening. We know that Cathie is buying, and it looks like if you just look at 2023, Cathie is up, doing pretty well for 2023, and a lot of people may want to just follow what she's doing. However, I want to remind you guys that even though Cathie Wood looks very successful in trading for 2023, we have to remember how she performed in 2022. And I have to remind you that it wasn't a pretty picture. But with that being said, if you guys want to get updates on the overall market or know what stocks I'm watching and the reason why, then make sure to click the first link in the description of this video. I'll also pin it in the comment section below. This way you guys have access. So it's a link to the Push and Profit program, and there's actually 50% off right now. It expires in just 15 days. So definitely take a look into that as you get over 5 hours of video lessons from me. And again, you get to take part of our daily briefings where we cover what is going on in the overall market. With that being said, guys, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.